Ladies and gentlemen, good morning. We are happy you could join us for Hansa Matrix Investor Webinar. Today we are hosted by Hansa Matrix Chairman of the Management Board, Jānis Sams, Management Board Member and Finance Director Māris Maciejevskis, and Founder of Lightspace Technologies, Ilmārs Osmans. We will start with a presentation on Hansa Matrix and its associated companies, Lightspace Technologies business update, and continue with a live Q&A session. If you would like to join the discussion or ask your question to the companies, please use the Q&A underneath the presentation. Gentlemen, I'm now handing it over to you.
Thank you, Eva. Good morning, everyone. Welcome to Hansa Matrix webinar. Today, just a second. So today we will review Q2 and H1 results in addition to another business-related topics. And before switching to Lightspace Technologies, we will be happy to answer the questions you sent already in advance. So business and operation highlights. Overall, we see high demand almost in all sectors, especially in IoT and industrial. It results into revenue growth despite continuous component deficit. Nevertheless, the semiconductor, we are talking every time, demand increase is slowly going down from 30% demand increase last year to 13% H1 2022. And that slightly improves component availability. And if we see what's happening in the plants, that the on-time delivery from the suppliers are improving by approximately 20%. So that's a positive signal for us as the EMS. Unfortunately, we face another crisis related to energy prices. So our key target is to secure alternative energy supply for our manufacturing plants in order to prepare and operate without any disruptions further. All of above mentioned keep us focusing on inventory level and cash flow management. And as you see, the first time we start to report the order book and continue to follow from quarter to quarter, and now we see the record high 21.8 million in our order book. That is actually 13% more than it was in Q1. Q2 financial results summary. So the revenue is 6.5 million euro, and this is 9% increase compared to the Q1. When EBITDA reached 400,000 euros. And the margins are mainly impacted by the product mix and increase of energy prices. So we go to the comparison with the peers. Hansa Matrix enterprise value to EBITDA multiple is 7 versus peer average, that is 12. Value of investment in Lightspace Technology currently is not fully represented in Hansa Matrix share price. Nevertheless, Hansa Matrix EBITDA margin is the second highest among the peers, and this is 11.4%. That's in general, and I will give over the mic to Mr. Maciejevskis, and he will dive deep into the financial figures then.
Yeah, thank you, Jānis, and hello everyone. So I will dive deep into financial figures of Q2 and 6 months. So in the second quarter of 2022, the company performance in terms of sales was actually very good. Revenue amounted to 6.5 million euro, which is 8% year-over-year increase and a 9% increase as compared to the first quarter of 2022. Going further, three main regions generating revenue were Baltic states with 38% of total, Nordic countries 28%, and the rest of EU countries with 29% of total. Services provided to outside the EU countries this quarter were 4% of the total revenue. And as you can see, this quarter revenue on year-over-year basis was significantly growing in Nordics and the rest of EU. Going further to revenue by sectors, So this quarter, two main revenue sectors were data networks with 28% and industrial with 55% of the total sales. IoT, optics, and photonics and other product sectors were respectively 11%, 5%, and 1% of the total revenue. This quarter, on year-over-year basis, revenue in industrial, IoT, and optics and photonics sectors increased significantly, while data networks sector revenue decreased. About profitability, this quarter the reported EBITDA amounted to 400,000 euro, decreasing both compared to Q2 21 and Q1 22. And net loss amounted to 700,000 euros. And as you can see, normalized net profit was also negative this quarter, and EBITDA margin was in amount of 6.55%. Going further to 6 months results, in 6 months of this year, 6% year-on-year growth was achieved, with revenue reaching 12.6 million euro, which is actually 25% higher than revenue in the second half of 2021. This increase in revenue reflects the strong market demand. However, as Jānis already mentioned, the global component deficit is still limiting the growth. Going further, in 6 months, revenue split by the regions was 41% in Baltics, 27% Nordic countries, 26% other EU countries, and 6% outside EU countries, with Nordic and other EU countries revenues increasing significantly, which was mostly related to good performance in industrial and IoT sectors. Revenue decrease in Baltics and outside the EU is explained by the component deficit challenges. In 6 months of this year, industrial products generated 48%, while data networks 31% of the total revenue. IoT, optics, and photonics and other product sectors were comparably smaller, up to 13% of the total revenue. As you can see, in first half of 2022, on year-over-year basis, revenue in industrial, IoT, and optics and photonics sectors increased significantly, while data networks sector revenue decreased. Sales increased in industrial, IoT, and optics and photonics sectors are explained by increased demand for wireless solutions, optics, and other industrial products. 6 months profitability, EBITDA amounts to 1.2 million euro, decreasing both compared to first and second half of 2021. EBITDA margin of 6 months was nearly 10%. Net loss result was 700,000 and is mostly explained by EIB loan provisions and losses from associates. 6 months normalized net profit adjusted by key non-cash items was positive, 30,000 euro. And why it was so low? It was determined by unusually low high value added product proportion in manufactured product mix, which was again due to the global component deficit. And for trailing 12 months period ending in second quarter of 2022, the revenue was 22.6 million euro and EBITDA was 2.6 million, with EBITDA margin 11.4%. Net profit was negative and was significantly influenced also by Zinātnes Parks provisions in amount of 1.4 million and other non-cash charges related to EIB loan, as well as losses from associates. Nevertheless, the calculated normalized net profit for the last 12 months was positive. Now I give floor back to Jānis.
Yes, thank you, Mari. We will look at what's happening with the new customers. So, and we are proud to announce that after successful trial batch, Hansa Matrix has signed a new agreement with leading aquaculture company in Nordics. And first of all, of course, it's extremely important that we were being entering now the new segment. This is the aquaculture. And Hansa Matrix will provide full range of services such as EMS, so electronics, POM, material machining, and final assembly and testing of the product. So the first products are underwater cameras and some complementary equipment. And in terms of business size, it's planned to have a revenue in amount of 5 million in first 3 years, and a new frame order recently received in amount of 3 million euro, and we are starting the supply actually in August and continue for 1 year. Some small information regarding the investment. So the first 6 months we were been investing a little, and we are planning to increase the investment for the last 6 months of this year, and we are going to invest in two big units. One is the CNC turning machine that is will be used mainly for the customer I mentioned in the previous slide, and we are going to invest in high efficiency X-ray machine, so that will be based in one of our manufacturing plants in order to do the testings for one of our key customers. So actually that's it from Hansa Matrix presentation. Thank you, and we could go then for the questions. Eva, we will need your support on that.
Sure. Thank you for the presentation. So we have several questions received prior to the webinar, and there are also many coming in during the online session. Let's start with the previously submitted ones. Do you see onshoring trend, meaning European companies transferring their orders from China to European suppliers?
Yes, the answer is yes, and as well for Hansa Matrix, we had 2 stories where the nearshoring is behind, and one is the one that I mentioned in my slide regarding the new agreement. So this is kind of nearshoring, as the new products will not be produced in Asia, but in Hansa Matrix. And then there is another healthcare project we are working on now, and the story is pretty much the same, so that instead of putting the new product in Asia, it will be placed in Hansa Matrix. I hope I answered the question then.
Thank you. What is your revenue guidance for the full year 2022 in percentages to 2021? And what share of it is due to price increases?
Yes, so the revenue guidance for the year-on-year revenue growth is in the range of from 9 to 18%, or in euros it's 24 to 26 million euro, and this is in line as we announced actually this guidance in Q1 of this year. For the second part of the question, it is actually very hard for us to separate this price increase effect on growth in revenue, because our product mix is constantly and significantly changing.
Thank you. What are the most important factors impacting profitability in the next 12 months?
There are 2 key factors. One of them is component availability for high added value products, energy prices, and wage and salary levels. 3 factors. So.
Clear, thank you. Continuing on the questions, what is the biggest risk to sales revenue in the next 6 months?
Yes, so as Jānis already mentioned, this quarter we started to report our information on our order book, which as at the end of this quarter amounted to nearly 22 million. growing by 13% over the second quarter. So as you can see, the level of orders is pretty high, is nearly in amount of our current yearly revenue. So the greatest risks for revenue in the coming 6 months are component availability, and actually as components are coming back, it's going to be also the workforce availability.
Thank you, Mari. Why normalized net profit margin is only 0? What should happen? What change could improve that?
Yes, so this we also mentioned already in presentation, but this quarter actually, this normalized net profit margin was significantly influenced by our product mix, where the high value-added products proportion was uncommonly low due to the component availability. So going further, as Jānis also mentioned in the beginning, we see that the component situation is improving. So we expect that we could expect that in the coming months, the higher value-added product proportion in product mix will increase, and the profitability will increase in the coming half year or year.
Thank you. Why administrative expenses have increased by 22% in the second quarter versus 2021, taking into account that during the period revenue was up only 8%?
I will answer on this question. So normally, again, it's reflecting the situation with the components, and in order to continue the deliveries, we were being obliged to put more resource on procurement process and in the new product implementation. So normally, in order to solve the issues with the missing components and doing some redesigns, we were being again obliged to do more prototypes than usual, and that required more resources that in the end costs more.
Thank you. Would you like to now continue with the questions received online?
I think yes, because most of them are, or all of them are regarding Hansa Matrix. I would suggest we go through them and then we switch to Lightspace technology.
Very good. So what are the reasons behind decreasing demand for semiconductors?
The story is that consumer market is decreased overall, especially in Europe. So simple saying is that the people are not buying those expensive cell phones and laptops. That's generating the decrease in demand of semiconductors.
Regarding the drop in second quarter EBITDA margin, can you be more specific about the nature of components lacking? Which products were more impacted?
That will be difficult to answer because normally the impact on the EBITDA drop is coming from the customer where Hansa Matrix is not controlling the material. So we are not we are not aware what exactly is missing. So because normally the customer is delivering us the material when they have all components in stock.
Thank you. Which, if any, of the items used to adjust the normalized profits were above the operating line?
Yes, maybe you could repeat the question, please.
Sure. Which, if any, of the items used to adjust for normalized profits were above the operating line?
No, actually, they are all below the operating line, or mostly all below.
Thank you. Did the regional sales mix have any impact on margins in the period?
No, I think not really, because the margins are not really the region related. It's mostly related to the type or the product itself and the setup with the client.
Yeah, that's product specific.
Yeah, and then of course you can link it to the regions, but it's not. It's coming from the product itself.
Thank you. Then there's a question about IoT sales. What is behind the recent pick in IoT sales, and is this level sustainable for the next 6 to 24 months?
So normally this increase is linked to the new two projects we are working with, and actually the project period is 12 to 18 months.
When would you expect data network segment to recover?
Answer is very short. So it's actually started. So normally the Q3 and Q4 we will see improvements in this segment.
Okay. Utility costs were 3.4% of 2021 cost of goods sold. What kind of a figure should we expect for financial year 2022 in terms of percentages of cost of goods sold or absolute figures?
No, we can say that it will be really significantly higher, because I think everyone is informed what are the percentage increases in electricity year on year, and in natural gas. But of course, in the cost structure, it's a quite small number. But anyway, this we will feel it. But what we are actually doing, we are proactively renegotiating pricing with the customers due to this energy increases, because these are really significant and could influence the profitability.
Thank you. And the follow-up question, could you also comment on the expected trend for labor costs for financial year 2022 and 2023?
So we are following the labor costs on the market, and we try to adapt them from year to year. And what we see now is that in order to be competitive in the labor market, so the increase could be between 8 to 12%.
Thank you, Jan. We have covered all the questions. No, my mistake, there is one more. You are stating for a while now that manufacturing service prices could be revised. With such low profitability in second quarter, will that be done soon?
Actually, with the part of the customers, it is already done this month, and we are continuing because we have more than 40 customers, and of course we are working according to Pareto. So when we started, of course, with the ones where we have the bigger stake.
Thank you. So now indeed the questions have been answered. We are ready to switch to Lightspace Technologies now, I believe.
Yes, Ilmar, stage is yours.
Hello, everybody. Hope everyone can sustain this heat wave we are having. You can see I'm a little bit sweating already. So, but nevertheless, let's talk about augmented reality. I'm presenting you Lightspace Technologies business update as usually. And before I start talking material, I'll tell you small news maybe. That there are changes in company management. A previous CEO, Madara Kalnie has left company, and I'm taking. I'm stepping as an interim CEO, and before we're looking for next candidate. So otherwise, company is continuing its operation as usual. And with maybe I'm coming in with some more focus on sales development and North America presence development. So generally speaking about business development, we have started to fulfill purchase orders. As you maybe remember, we launched the product we launched the product in May, and since June it's in production. Of course, initially production is small scale. Their number per month is below 10 that we manufacture, and however we started to receive the initial POs, and already those are fulfilled as of today. There are some new projects starting. The two large medtechs started evaluation projects, where in a progress of those projects will be, each of them will be required 5 to 10 headset units over the period of next 12 months. And also work continues with the small companies that are very much quicker making decisions. And currently lead time, Lightspace is accepting purchase orders with 6 to 8 weeks lead time. Of course, all the problems with deficit, component deficit, also we experiencing all that, and also we are experiencing some deficit in manufacturing capacity of metal parts. And on a business side, we have started to develop authorized reseller program. First reseller will be already finishing negotiations will be in US, and of course this will continue. And as a company, we plan is not to build very big sales department like in central location, but distribute the sales and outsource sales to already existing distribution networks of the AR/VR products and integration partners. Next slide, please. Research development news. As usually, Lightspace is quite active on attracting R&D grants. Of course, deep tech company developing enabling technologies is really keen and always very beneficial from the all kind of funding sources. And for of course having grants, it's very beneficial also for our shareholders. And it's European Commission end of the July approved Lightspace project that Lightspace was one of the partners together with a number of West European parties. That was German, French, and Italian mostly, universities and industrial like R&D facilities. And it's project it's Nexar Technologies called ShareSpace, and interestingly is that we are excited that this project received actually maximum possible evaluation score of 15. That's I never faced that such a result in evaluation process of projects. So project is large. However, as I say, Lightspace is one out of quite many partners, so we're not receiving so big share of the funding here. And there is another project continuous evaluation with Project Innovate UK for our UK newly developed R&D location. We are planning joint project there with also one of the big med techs regarding usage of augmented reality in robotic surgeries. And locally in Latvia, it's good news. Recently came that new research development funding round can be approved to Latvian Competence Center program, and Lightspace is active participant in this program, and we are finishing right now existing project there. I think this will be finished in the fall, and we will be starting we apply for new projects like in Q3. Next slide, please. Funding news. Yeah, as it's been announced before that we are kind of heading for North America, and to get funding through various sources there. And just in Q3, we can announce that we have extended our bridge round funding to 2.4 million euros. And of course there are pre-listing investment round search for process to investors already started in US and Canada. If there is an interested parties to participate in any of those rounds, that we are welcome to contact us at investor@lightspace3d.com. Next slide, please. And already announced process to get listed. This is just a repeating slide. The chosen trading platform is Toronto Stock Exchange. Listing process expected to be extended a little bit We were planning to do it this fall, but a lot of advisors advised us to a little bit move it further into next year because of all kind of difficulties into market. So currently we are planning to do it in a period 9 to 12 months. So meaning into next year. And on a way there, Lightspace is planning to raise minimum $10 million new capital. And the usage of funds, business development, ramp-up manufacturing, and further development of our technology. So that next slide, please. Okay, that was last slide. So if there are any questions, I'm happy to answer. Before webinar, we didn't receive any. Okay, I already see.
Mm-hmm.
Yeah, please help with them maybe.
Sure.
Nicely reading those.
Sure, we do have two questions currently. So did the Lightspace loan conversion of 2 million euro come from the recent bridge funding round?
Yes, answer is yes, because the bridge round was started with using convertible notes, and once we achieved some meaningful amount, we did conversion. That was certainly it was bridge round part of it, and changed version. I'm not really sure, and I cannot answer this one. I need to check with the figures. Was it really true? Because you have to understand that we also are. Conversion was exactly as I said, 2 million, and there is some extension to some additional investors to this bridge round came after this conversion, so they will be converted on additional conversion there. But I need to check figures. I cannot answer you this one. I think we converted just 2 million. Okay, it can be bigger than that. Oh no, sorry, I can answer you. I can say you this is expected. These are some shares which are issued, not yet paid, to account for this additional investors. Actually, they will be paying up these shares. So at the fact after the second closing or final closing of bridge round, you will see the actual result of that.
Mm-hmm.
Okay, next slide, please. Oh, next question.
Mm-hmm. And Ilmar, this question covered the second question. Right, so we are now turning to the third one. Analyzing changes in share capital and share premium, the Lightspace post-money valuation stood at 12.55 million euro in bridge funding round. While last year in November, Hansa Matrix converted its remaining convertible loans with post-money equity valuation around 14 million. Why would valuation drop considering latest Lightspace developments?
I probably have to comment this, of course, but you have to understand that valuation as a company is not connected to the convertible loans. Maybe numbers always when you do bridge rounds, there are some corrections or some discounts to the valuations to get them quickly sorted out, and that's a usual practice, and we are not unique here. However, valuation of the company is considered much higher, and you can of course from public sources see that when the Hansa Matrix established Lightspace Holding, what valuation it invested the shares there. But in principle, this does not reflect third-party valuation. This is a discount which allows attract quickly needed liquidity.
Mm-hmm. Thank you. Did I understand correctly that the current production run rate is 10 headsets per month? Any visibility on when this run rate should grow?
I mentioned it's not yet reached 10. It's below 10, but it's at that level. And of course, we have projects that will demand the headsets. But when you start manufacturing, you usually not start with a large volume, but you start with smaller number, because you have to work out all industrialization issues. You have to develop manufacturing process, and you need to improve, and you maybe need to fix some bugs in the product, some kind of problems that has not been figured out yet before starting manufacturing. For that reason, there is a purpose of starting low volume, and of course, when it should grow, of course, with the coming of more orders, it will grow. We are working kind of fulfilling orders. That's a basic. When it's, of course, we have. I think we will announce if that trend, when the trend starts, but I believe this is some kind of 6 to 12 month like period. Then you will see difference. Next question, please.
Participants are interested in the current unit sales prices and production costs.
Only thing I can tell you, of course, pricing is a little bit confidential. We are not publishing that, but the production costs is currently we work with 100% margin on the products, and because of the being small scale production, and of course sales manufacturing costs are relatively high, so they are selling expensively right now. So this is quite a high cost product. From other hand, the market sectors that we are selling is this is healthcare and this is defense as well. So both are accepting those price levels.
Thank you. And coming back to Lightspace valuation, the question is whether the IPO valuation is expected to be much higher.
First of all, I need to correct a little bit. It was said in our announcement as well that we are not heading for IPO. So we are not heading for public offering. We are going with the private placement process, meaning that we will negotiate valuation upfront before listing. And answer is yes. It's expected higher, substantially higher.
Gentlemen, thank you. We have managed to answer all the questions that were submitted both before the webinar and during the webinar. The recording of this session will soon be available online. Therefore, please follow Hansa Matrix announcements to stay up to date with company's news. Thank you for a very intense and valuable hour that we spent together today.
Thank you very much, everyone.